Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Tons of information to go over right now. So we have the jobs data that just hit. We have big data moves in the markets based off of that. We have GameStop going nuts this morning, as high as $65 pre-market, down to $35 here after the company announced they were selling shares and actually pre-released their earnings that were scheduled for next week. I'm going to cover that as well. So tons of information. We're going to look at the charts to see what inklings and insights we can get from it. Let's get right to it. All right, guys, right into the action. Here we go. This is your S&P 500 pre-market here. So what we see is we see a nice drop on the jobs data. I do want to go over the jobs data right now with you. So basically the number came in extremely hot. We had a number that came in at 272,000 jobs created. Expectations were for only 182,000. So we're talking about a 90,000 job beat on this number. Now, this looks really hot, and most people and initially the markets are like, holy cow, this is really bad. Now, listen, it's good for the economy, but it's bad if you want rate cuts, right? But there's a little bit, if you do some digging here, it's not as clear-cut and bad as that is for the overall economy. And what I mean by that is, number one, the unemployment rate came in upticking. So unemployment upticked to 4%, so 4.0%. Expectations had been 3.9%. So that kind of mitigates a little bit of this hot number, the fact that unemployment went up. Now, why would unemployment go up? My guess is that more people are entering the workforce. There's probably people that are starting to struggle because of inflation. They maybe had retired early or just said, hey, I have enough money saved, I'm going to take some time off. Inflation is starting to eat up, though, that nest egg, and they're saying, hey, we have to get back into the labor market and start looking for jobs, and that alone can uptick this number even while this number stays strong, right? So that's important to understand. Next, another key data point that also has me thinking like, all right, is this really the big sell-off in the markets that some people might assume? I don't think it is yet, and I'm going to tell you why. Last month, jobs created were 175,000, right? So we'll draw a line there to separate it. They revised this number down to 165,000. So they actually lowered last month's jobs that were created by 10,000. Now you might say, okay, well, that's not a big drop. It's not. But what this does on a psychological basis to investors is say, wait, if they revise this number down, and how many times have we seen them revise it down? Well, then they'll probably revise this one down, maybe to 225, right? And if you revise it down to 225, it's not that far off of this number. And listen, I don't know if this is going to happen, but I'm using my knowledge of human psychology to connect the dots to what people are going to say. So we can see the S&P getting a small bounce, and really, to be honest, we're not down that much. Lastly, hourly earnings, and this one, to be honest, is concerning to me because it makes the job of the Federal Reserve harder, that people are starting to make more money. And what do I mean by that? I know it sounds so silly, like, great, people are making more money, but to the Fed, that can be inflationary. So if we look at average hourly earnings, they went up 0.4%, right? Expectations were for a rise of only 0.3%. So we see hourly earnings going up, and that again means people have more money. If you follow the chain of inflation, people have more money, they spend more money, that increases the demand for products, which by default generally will push up inflation. So this number to me is more alarming to me than the 272,000 jobs that were created in the latest month, all right? Okay, so if we look here, we see the SPY upticking just a little bit off the lows. Now again, putting it in perspective, that looks like a big drop. It's not that big of a drop. If we look at where we closed yesterday, we closed, let me see here, right here, we closed right up here at around 534.5, 534.50 on the SPY. We're trading at 532.60, so we're not even down $2 on the SPY or 20 points on the S&P 500. So considering the gains we've seen in the market recently, that's not that big of a move yet. And I say yet because we don't know what happens the rest of the day, but what I do know is that every investor out there that knows about the economy, that knows about economic data, what are they doing right now? They're saying, okay, we know these numbers. Obviously, you'll see the market adjust. But my guess is by noon today, maybe even 11 a.m. Eastern time, everyone's going to say, okay, jobs are over. Now, everyone turn your attention to next week's Federal Reserve meeting and rate decision. And when Jerome Powell comes out, that's what it's going to be all about. So the market is always about kicking it to the next big event. Well, the next big event, this one's over now. The next big event is the Fed meeting next week, and that'll be on Wednesday at 2 p.m. And just like I've always been doing, guys, don't forget, I will go live at 1:55 p.m., and probably with Dr. B, we'll stay live for that 45 minutes to an hour going into his press conference and go through it, maybe even do some trading live on here at verifiedinvesting.com. Look at this, by the way. Markets are starting to recover. Maybe everyone's listening to what I'm saying. Who knows? I'm just saying. All right. Couple other things to go over here. Let's look at the 10-year yield. The 10-year yield did spike on this, which makes sense, right? It makes it the job of the Fed maybe a little bit more hawkish in terms of the data. We had a breakdown here of a wedge. We're retracing. This is normal. Remember, when you break below a wedge pattern, let's draw this wedge right here. When you do this, right, and you break down, what do you usually do? You go back to what's called a scene of the crime retrace before you continue down. And so that's my guess what is going to happen here is that we'll see where we end, but it wouldn't shock me if we close right on this line right there today, which would still be net positive for the day. But again, it would be a classic retrace to the scene of the crime. And then the question is next week, is Jerome Powell, slightly more dovish again? And then maybe we see the yield start to roll over. Although I got to be honest, it's hard for me to understand how the Fed can continue to be pseudo-dovish. And again, you could say they're not that dovish, but they keep on talking about, yes, we're open to rate cuts. And that just programs investors' minds to say, okay, well, we're going to get rate cuts eventually, right? So that's what the market's holding on to. And you have markets at all-time highs, which again is inflationary, right? The wealth effect. We understand that wealth effect. So in any case, we'll see what those numbers are tomorrow, but nice retrace here. The U.S. dollar is also bouncing today. Nice bounce on the U.S. dollar. You can see if we zoom in on this chart, we were kind of right at this key support here, right there, and then you're getting a little bounce. Now, I still am in favor of eventually the dollar breaking lower per the chart analysis that I do, but right now you're getting a classic support level bounce on the U.S. dollar. Be interesting to see, too, if there might be a trend line kind of like right here to here, and then we're right up into that level there. We'll have to watch and see which way does it ultimately end up breaking. Okay, couple other charts that I want to go over here, but lots of data this morning. We should take a look at GameStop. This has been insane, folks. So I'm going to walk you through this. So yesterday, Roaring Kitty, Keith Gill, reactivated. He set up a live stream for today at noon, right? So all of a sudden, we saw yesterday's GameStop shares go nuts to the upside, closing at something like $46. I think it was up something like, I don't know, it was up 50% yesterday, something like that. In the after hours, the hype continued, as it often does, all the way to a point where this was trading at $68 a share last night. This was just before the after hours closed at 8 p.m. Eastern time. This morning at 4 in the morning, it was down a little bit, chopped, went back up to about 65, and then all hell broke loose. Now, what happened here, folks? Well, basically what happened was the company GameStop released earnings a week early. They were scheduled to release earnings next week. They dropped earnings to the market today. Okay, well, why did they do that? At first, I was saying to myself, well, is it because there's so much hype they can get these bad numbers out to people and everyone's just going to focus on Roaring Kitty's live stream at noon? So that was the initial thought. And we did see a little bit of a drop when that news was released because I looked at the earnings and revenue numbers. I mean, let's just go over the revenue numbers here, guys. Last year in this same quarter, so the first quarter of 2023, which is what these earnings were from, the first quarter of 2024, they did something like $1.2 billion approximately in revenue, right? So that was their revenue number. This quarter, in January to March, or through March, they only did $0.88 billion in revenue. So, I mean, that is not good for a business that is now valued at, 20, 30, 40 billion based on where it was on this chart going through. So that was bad, and I was like, okay, maybe they just wanted to, I mean, if I was a company, maybe I'd try to do the same thing, throw the bad news out while there's all this hype and people won't notice as much because they're focusing on that. that didn't turn out to be the reason. The reason is because just a little while later, they came out and said, hey, we were going to sell X amount of shares. We're now going to sell way more shares to raise a massive amount of capital. Now, when a company does this, they're basically looking to say, hey, listen, our stock price is so high that we have to raise money and utilize this stock price. So we're going to sell a bunch of shares at the current levels, and then we'll make this money, or at least put it in our coffers to be able to use to keep the company running. And so as soon as that hit, you saw GameStop just dump out like crazy, and now it's trading, $37 from 67, 68 last night. That's an incredible drop, folks. Really nuts, really nuts. Now, is there anyone at fault here? Let's talk about this, because I'm sure on social media people are like, oh, screw the company or whatever. To be honest, if you're running a company and your stock price is obviously overvalued, you got to raise capital. SMCI did this when it was at $1,200 a share. This is what you do. If you're the CEO, it's almost negligent if you don't use that to raise capital. Look at these numbers. They need to reinvent themselves, right? So you have to raise capital. Now the question is, will they use that capital to reinvent themselves? That's what they should do. Whether or not they do that, that's up in the air. But my point is, you can't get mad at a company for doing what a company should do. On the other side, people were like, oh, is it illegal for Keith Gill to be doing a lot? No. All he's doing is telling people what he's doing. Remember free speech, guys, what we all get riled up about when on social media people try to clamp down and say, oh, you can't say that. If he wants to say he has, and he wants to show screenshots of his portfolio, he can do it. He's not telling anyone to buy it. He's not telling anyone that there's a price target that he has at $1 million. All he's doing is saying, this is my position. This is what it is. There's nothing illegal about it, folks. And again, you just call him, honestly, he's kind of like an influencer at this point. That's what it is. Now, people like to shift blame. And this is one of my big, sorry I'm going on rants today, guys, but one of my big issues is that in general, in today's society especially, people don't like to take ownership of their actions. Take ownership. Trust me, do you know how many times in my early career I bought stocks that were up here off of this type of move? I did it all the time, and I paid the price. And you know what? I learned my lessons. That's what you got to do. Sometimes you got to go through the hurdles. We're not in this everyone gets a trophy type situation in the stock market. No, not everyone gets a trophy, obviously, right? Some people do. Some people that bought here and sold up here, you get a trophy. Good job, right? But you bought up here and now it's down here, you don't get a trophy. That's the way the real world is, right? So anyways, I'm going to get off that rant and rave, but my point is, again, learn personal responsibility. We all make mistakes. We all have to learn. Sometimes it costs us money. Sucks. I've gone through it a million times. I'm sure I'll go through it again as well in my trading career. All right. Lastly, Nvidia, we'll take a look at this. I do have this daily channel that I talked to you guys about. As of yesterday, it opened up above it, fell back inside of it. Let's take a look where it is pre-market today here, guys. It is down on the day, although not down that much, but we are seeing it roll over with the stock market today. So just interesting to watch that bigger channel to see if it does have teeth or if Nvidia can just be the Superman of the markets and just blow right through that as well. All right. On that note, folks, what I want to do next is I want to do our daily spin to give away our Wheel of Appreciation prize, which was $300 in credit to VI. Let's do it right now. Who's going to win that $300? Remember, reach out to Lawton at Verified Investing to claim that prize, and that is awesome, folks. So again, we're just going to keep giving away stuff here, and I hope more and more sponsors join us, by the way, on the Wheel of Appreciation. All right, Ali Charua, congratulations, and sorry if I'm not saying that correctly, but I think that was pretty decent, maybe decent. Maybe some of you guys are like, no, it's not, but either way, there's your winner today, guys, and we will do it again. Don't forget to be entered into these daily drawings. All you have to do is share this stream on one of the socials that you have, and then post as a comment either on YouTube or Twitter where you shared it, and then we basically do a drawing from all those people that do that. We verify, and don't forget, you have to be a follower of Verified Investing either on YouTube or on X or Twitter, whatever you want to call it. All right, speaking of spinning the Wheel of Appreciation, let's do it right now, and then we'll get into some other charts. Today it is, good one right here, guys. All right, Range Trading Mastery, 3-month access. This is Paul Sampson's service. So again, you always check it out. This is a crypto service, guys, and he is awesome. He rocks it. And again, I think he's month on average, like 18%. I don't remember the exact numbers, but you can go check out the track record of his service at Verified Investing. But he is a good pro, guys. He knows his crypto. He trades it actively. If you want crypto alerts, this is the place to get him right here. 3 months access to Paul Sampson's Range Trading Mastery. All right. Actually, this is actually his course, and I apologize for that. This is his course, Range Trading Mastery, which is where he actually teaches you how to do it and what he does and his analysis techniques. So tomorrow or Monday we'll give away that, and then obviously check out his service, just like I said. All right, we do have. What's that?
Smart Money ETF.
Is that the commercial we have?
Yes.
Awesome, guys. All right, so we do have a quick commercial, guys. This is, again, we're just kind of showcasing some of the stuff we offer, so I'll be back in about 30 seconds or so, but we'll take it away. Hey everybody, welcome to Smart Money Stocks and ETFs. My name is Gareth Soloway. I'm a verified pro trader here. 25 years of experience. I've been through it all, from the dot-com bubble through the Great Recession all the way to the current markets. In this service, you're going to get chart posts 24/7. When I see something morning, noon, or night, or even on weekends, I'm posting up the levels, giving you analysis and everything you need to be fully informed about the truth, the data, the technical analysis within the markets of stocks and ETFs. In addition, you get exact entry and exit signals from me with suggested portfolio, position size, everything you need to conquer this market and make money for the long term. All right, guys, we are back right here. Right into Bitcoin we go. Then we'll cover gold as well as some other commodities. Plus, I think today we're going to look at Cardano on the daily chart as well. But look at this, guys. So we know that we have this resistance level. This is kind of where we were yesterday. But you can see how Bitcoin is hammering, right? It's struggling a little bit here. But that's actually okay. That's healthy, right? It's building ideally. And this I drew before. I said, is it going to do this and then break out? Right now, you would say yes. Now, could that change? It could change. But right now, the pattern is the pattern, and you go with the pattern. And so far, again, this chart is into minor resistance here, but it is still in control by the bulls. So what would make the bears take over control? I already showed you guys this the last few days, but any daily close in this zone below this downsloping channel would give, basically it would be a break of the bullish pattern, which would then give the bears control for a potential move down here. But right now, again, bullish pattern, beautiful channel breakout, consolidation, move up, now trying to break this level, which would send it to 74,000. All right, next up we go to Cardano. As I promised, Cardano's actually having a good little pop today. I'm impressed. Is it breaking out? The answer is not yet, but we still want to keep our eyes on it. So we have a very clear, this is what would be referred to in all fairness as a bearish flag pattern, right? We have our flagpole and all this chop in here, but that doesn't mean bear patterns can't fail, right? So for it to fail, see this pivot top to pivot top, you need to see price of Cardano get above that level, which is approximately 50 cents. If it can get through that, then you start to see the momentum come in and go to the upside. But you can't assume that yet. Remember, folks, the charts are in charge. I'm not in charge. You're not in charge. No one's in charge here. And right now it is below, so it's just continuing its sideways chop. And until proven otherwise, we just assume it keeps doing that on the charts. All right, so breakdown would be below here. Breakout would be above there. Anything in here is honestly just choppy, even though today's move on Cardano is pretty solid. Next up, let's take a look at gold. Now, gold was really interesting. Going into the jobs report this morning, gold was already dumping out. And I even hypothesized, I said, wow, does someone know something in the commodity realm that basically is telling something? Because yesterday, we got this close here. We can draw this line and this line here. What kind of flag pattern is that? That's bearish. We did close above it, but it didn't recapture this upsloping line, so you wouldn't classify it as bullish. And I was very suspect of it yesterday. In the services, in the commodity service, I run Smart Money Commodities. I was talking about this. I was like, is this a bull trap? And bull traps are where they try to coax in the bulls before they flush it right out, right? Well, it looks like as of now, that might be what it is. We'll see where it closes, but I'm still watching on a basis here. This lower trend line right here, guys, right here, that is my line to watch. A daily close below this, and I think we ultimately end up going down here. There will be a level here, though, in all fairness, at around 2280. But right now, if we can close below, that bear flag should begin to play out to the downside. Now, my bias remains mid to long-term huge bull on gold, but the chart's the chart. I mean, this is, again, it doesn't matter what you think if you're bullish or bearish. The chart is the chart, and that if you look at a textbook, textbook pattern is bearish right now, and that's a short term. Again, remember, technical analysis like this is made not to tell you where Bitcoin will be or gold will be in a year from now. It's really telling you where it's going to be in a week to a month from now, and that right now would be that move to the downside. So important to understand time frames. Now, by the way, if I wanted to analyze the bigger time frame, I'd go to the monthly chart, and then that would give me probably where gold will be in the next 6, 12 to 18 months, which is actually still very bullish. Silver, classic channel here, guys. Let me zoom in on this a little so we can see it a little closer up. But again, I even hypothesized yesterday we were starting to do this, and that's exactly what happened. Yesterday into this morning, we went there. Now we're coming back here like this. And here again is my ideal buying level. Now, I say that at this point, I don't know. Remember, on a daily basis, I'm always reevaluating. So every candle to me is a new piece of the puzzle. So I'm putting, all right, all right, now I look at the chart. Did it change? Did it change my analysis? Sometimes it does. And so while I say this is my ideal entry here, I don't know when it gets there if that will still hold true. That's why I love that these game plans are daily, because I can really keep you guys fully updated on them. Looking to oil here, guys. Oil getting a flattish move today. That's okay. My goal here again is, assuming all things remain as they are, if we can go up like this and go into here, that to me would be a shortable level on oil, as it would be a retrace to this trend line and a retrace to the scene of the crime right there. All right, and then lastly, natural gas, just to touch base on this real quick, guys. We have basically at this point no price action worthy of a trade. We still are stuck in between two levels. No bull flags, no bear flags. It's basically just hop skipping here like this. Are we going to go here? Are we going to go back down here? We don't know yet, and we don't have probabilities that are high enough to give us any insights other than 50-50. Like, I look at this and I say, earlier we were bullish down here, then we shorted up here because we had probabilities on our side, which is what TA gives you, technical analysis, right? But as of now, we're in between. There's no definitive high probability scenario on natural gas. So what does that mean? It's a no touch. No touch. And in all fairness, most charts are no touches until you get the higher probability ones. All right, guys, it is Friday, and you know what Friday means? It means I get a little break for 2 days before I come back to you guys and do the game plan again on Monday, which honestly I love. I love these guys, and I love your comments, and I thank you so much for sharing, trying to grow this brand into being what I dream it to be. Verified Investing is fighting for the small investor. That homepage alone, if you look at it on Verified Investing, has so much in quality information that you normally would have to go to an institution or be a high net worth individual to get. And I just want to keep bringing that quality to you guys. Doesn't mean it's always going to be right? That's the key. Understanding that it's not always, but at least giving you the facts, the data. That's what Verified Investing is all about. So on that note, have a great weekend. I'll see you on Monday.